So I've got clients that bought years ago, and they would have remortgaged at some point in time for whatever reason, to pay off credit cards, to pay off debts, and all that. What is some advice that you might have for them?
Well, what we need to find out first of all is what was the interest rate that they refinanced at, say, 10, 15 years ago. Likely, if it's any time in the early 90s, late 80s, it was a high interest rate.
20%.
We are at historical lows right now. There is no getting around it. So even if it was 5 years ago and they were 2 points higher than what they are now, the reality is we could switch that mortgage over to a different lender with maybe some different terms, some different prepayment options, some different conditions. And definitely a lower interest rate that's going to help them get ahead, pay back some of that mortgage that they may have used some of the equity for miscellaneous things or things that they might not have or wanted to or should have done, and in some way get their equity back into.
So actually the key is helping someone get ahead.
Yeah.
So a good philosophy is if they are going to refinance right now at a lower interest rate, instead of just lowering their payment, if they are comfortable with the payment they'd be making with a higher rate, good idea for them to keep that payment, right?
Absolutely, hands down. You think about just something like 1% of your mortgage amount put on to the mortgage yearly.
The principal.
Yeah, of the principal. That knocks your mortgage down by 10 years.
Yeah.
10 years
huge
is
amount.
a huge amount.
Yeah, and it's a good way to get ahead.
Yeah, and we see some of the most successful people we know doing it because it's a smart move. And I'm not saying that the people that don't do it aren't successful, but the reality is you're pounding away equity into your home.
Maybe the people who don't do it just don't know.
They just don't know. Yeah.
All right, now you know.